Hey traders, it's 1:45 here in London, UK. Just going to have a quick look through the market. It's Monday afternoon as the US has come into play. One thing I want to say is after Friday's Non Farm Payroll, shows that Friday was pretty much a little bit of a shakeout. The data was mixed. Employment data obviously came in a little bit better than forecast. However, the average hourly earnings was a miss. Therefore, the type of jobs that were given out through the month were obviously of lower pay, lower quality. So therefore, it's having that sort of reverse impact now on the market. I want to see how today finishes out, but the trades that we sent out last week are playing out rather nicely right now. So we're just going to focus what actually happened and what's currently setting up. So as we talked about last week, 97.50 key level here on the dollar index. Expect to see the dollar come down towards 97. 97 will either see buyers come back in, or I'd expect, and what I do expect, is for 97 to break and us to come down to at least this trend line, and maybe even over the course of April towards the end of May touch 96 and maybe even down towards 95, but we'll wait and see on that. I do expect to see a further downside, not just off the technical side, but also a seasonal play, which is a seasonal bearish month for the dollar. Therefore, we should see some positive moves around the euro, sterling, Aussie, Kiwi, potentially CAD. Swissy and yen not really movers throughout April as much as the other markets, and I would much rather trade euro than Swissy. Also, we'll come to the technicals as well. They line up better on those other markets. So what we're looking at right now, we can see that this market here respecting 97.50, we've taken a rejection. If we move this down to a smaller time frame, you'll see we were focusing on this inverted head and this head and shoulders that's formed. It's now created a double top on the 4 hourly. So we'll look for this neckline to break and retest at 97, and then we'll short that continually down towards 96.50 first area, and then hopefully even further down towards 95. But obviously we're not going to count our eggs before they've hatched. So we'll see how this market plays out, and we'll look for the corresponding trades on the inverted market here, the euro dollar. So as you can see, the trade that we sent out last week was the right shoulder. Obviously we didn't see this sell off here because that was before that decline happened on euro dollar. We bought around here on the left shoulder, stops underneath the head. You can see the market now. We want to see if the hourly candle is going to close above this neckline. If it does, well then that should mean that we'll see a free run right the way through to at least 113.20. Nice positive, good risk reward trade there. Over a 3-to-1 should be going to hit targets. We will be looking for an additional trade in this on this market, and that will be a retest of this area here. If you want to see exactly how we take these trades and the entry calls, all you need to do is join our live traders club. We do have a special offer on at the minute. If you buy the club this month and you are in London, you can get a free ticket to our event on the 23rd of April in Heathrow. So euro dollar is looking quite nice. We move across to sterling, and you know, regardless of Brexit and what's going to happen there, we're seeing that this sort of zone here around the 1.3 area is holding tight. And if we move up just here, you'll see on the daily that the market has actually failed over the last few weeks. It's penetrated through 1.3030, but it's failed to close below it, and we're seeing that also today. The market's been testing it but not really breaking through. So anything through here we should be able to look for, especially if you're a short-term trader. There's definitely room to take a few pips out of the market, anywhere between 1.3, 1.32 up and towards 1.360. And we'll show you that down on the hourly. So you'll see today the market's been fluctuating from this sort of 1.340 into 1.36. So it's 20 pip range. It's very tight, but it just, if you do want to keep nicking a few pips, it's definitely setting up each time around 1.34. However, if you're looking for that seasonal move and you want to take advantage of what is potentially going to be a dollar bear market for the next month, then any sort of acquisition in selling US dollar in this region should be able to pay you dividend over the course of the month. If you want to apply a set of rules to that, then obviously you need to understand your technicals a little bit better, whether you use price action, which you can see by the clean charts. That's all we look at. We don't use any sort of indicators. Not looking for anything that's anything other than price to tell us where the market is likely to go. It doesn't mean we're right 100% of the time, and I wish we were, but unfortunately we're not. So moving forward, best pricing to be sort of buying this market would be around 1.3. However, if you're looking for something a little bit more conservative, you can watch for potential break of this short-term counter trend line and then look for the market to push on into 133.20. But then that should be a real clear sign of where the bulls are coming into town, is if we get a daily close above 133.40, and then we can use that area to get long, and we should see some very clear room all the way up into about 140s. So if you look at this, so 136, and then the next move is up into that 144. So you can see here right now we get through here, next move up, and then it's a lot of clear space. So really, this is the key marker, 133.60. We get a close above there, and we should see some really nice upward movement on sterling. The one thing that will hold this down is obviously Brexit. Deal passed, no deal. If it's a no deal, we'll then expect to see a good 3-5% sell off in this market, and we could see 125, maybe even the 121s in the lows back here tested. However, there's no point guessing what's going to happen. Just read the charts and trade what you see. Risk management will keep you protected, i.e. you can never lose more than you actually put on the market. That is the only thing you are in control of, how much money you are prepared to risk. Everything else is a little bit of luck, a little bit of analysis, a little bit of fundamentals, and you can't control the outcome. The only thing you control is how much risk you put into the market. Moving over to Aussie dollar, well, 70028 all the way down to about 7,000 is a really nice sort of area to be looking to get long, but Aussie could break out. Look for a break of the descending counter trend line, and then you can use this area where we're currently sat right now. You look at those tips of wicks, look at those daily candles that are struggling to close through this area, and you're just getting these wick rejections. So if we can break up out of the counter trend line and then pull back down into that 71.20, maybe even down as low as 71.10, and then we should be able to look for some nice trading opportunities long. Kiwi should present a really nice opportunity right now. We're right in the buying zone. This is where you want to be looking to get long. Any sort of trade around that, if you wanted to get long now, you could look for a retest of these candle structures here. Alternatively, you've got this doji body here, this cycle low. Wait for a break or a clear break and close above this area here. What's that? 67.42, 67.40. Wait for a clear break and candle close above there, and then look to use that area as an area to get long. First targets, you're going to be just short of 6,800, and then trade up to the top of the range. Really simple trading, nothing crazy here, guys. And then the other market that is looking quite nice across the majors is Canadian dollar. So this is one that we should potentially see, and in line with a seasonal bullish sentiment for crude oil. Crude oil is significantly a huge bullish month through April, so expect to see this pass on some of its rewards into Canadian dollar, and then couple that with a weak US dollar. We should smash through 133, and I think we'd be able to get through this ascending trend line, and maybe look at least down to 131. So there should be some really nice potential rewards on the table here for Canadian dollar. Let's take a quick look at so we are very bullish seasonally on WTI. However, I don't like the extended move that we're in right now, so I wouldn't be a buyer just yet. I'd be looking for the market to pull back and then look for some signal in and around the $60 region, somewhere around this cluster here. You know, some movement back into here, looking for a nice price action, then expect to see that market push on, and you know, take profit around 64, and then we'll see what happens. Seasonal bear period for this doesn't come until sort of August, September time. So expect to see a little pullback, market push on, then some consolidation through the back end of summer, and then we can look for that sell signal as seasonal bear periods kick into play. Okay, that's it from myself, Mark Owen, here at Trade and Train on Monday afternoon. If you did enjoy the information and the trade analysis, what I would suggest is please hit like and share it with any fellow traders. And if you don't want to miss any of our future videos, click subscribe, and as soon as we publish our videos, it'll come straight to your inbox. Okay, traders, have a great week, and we look forward to seeing you later in the week.